Value investors Monish Babra and Guy Spear talk about how they're making their investments in India in the current market volatility. Here's a candid chat with both of them.
I think value investing is timeless. I don't think it is a fad or anything. I think it will be here 50 years from now, and it was here 50 years in the past. So I think the value of individual stocks going up and down. So for example, there have been, I think, 3 or 4 times when Berkshire Hathaway has dropped more than 50%, right? And so, the blues of the blue chips, if you will. And so we should not be reacting. I mean, just to give you an example, there's a company in my portfolio, Rain Industries, right?
Exactly.
So,
I don't want to name
so
it.
3 years ago, 3.5 years ago, when I was buying the company, it was trading between, let's say, $35 and $45, 45 rupees a share.
Sure.
And did nothing for a couple of years, actually went down. And we just sat there doing nothing. And then in the last, let's say, 18 months, it went from 50 to nearly 500, right? It went up, quite dramatically. And then from, the high 400s, it went down to 150. And none of that is very relevant, right? So it has impacts on how the portfolio is valued. But for me, what matters is what is the value of the business and where is the business going long term. And on those 2 fronts, I think the news is generally good. So we own about 10% of Rain. We used to own 10% of Rain 3 months ago and 6 months ago and 9 months ago, and we still own that.
Right.
And that's just the way it is.
I would just, for the viewers' sake, so Monish has a very particular wiring that I don't think it's fair. You don't have, in order to be a successful investor, you don't have to have Monish's wiring. I don't have Monish's wiring. So I've observed him with enormous swings in his portfolio, which would have me feeling maybe a little bit more like your viewers, and it really doesn't affect Monish. And the answer is, perhaps, let's say for me, is make sure that I don't put myself in a situation where it's going to affect me as much. So one is to have a reduced concentration in things that might move around a lot. But the other thing that I do is that I deliberately and self-consciously do not check the stock price for days, even weeks at a time.
Month?
In fact, possibly. Possibly.
No, you have to review every quarter, right?
No, because the CFO is doing the review. And what I found is that when something important happens, I'll find out anyway. Okay. So I suspect that, and many people who come into a market or who would start investing are checking just too frequently. And I know it sounds unusual, but especially if it's your own money, once a year is just fine. And I found, and I ran the experiment, what happens if I check the stock price less frequently? It does not affect performance at all.
And Tanvi, the thing is, a large portion of the investing public in India is in their 20s and 30s, maybe early 40s. And so they have decades before they would retire and want to dip into their savings and so on. So the best thing that they can do is just 2 very simple things. One is invest in a well-diversified index fund. And the second is spend less than you earn. So just keep putting something away every month. Ignore the market levels, they'll go up and down. But if you're 30-something and you do this for 30 years or 40 years, you're going to wake up and be enormously wealthy without really having ever made a lot of money in any given year.
Okay.
Right? And so the thing is, that's what we want to do. We want to play the long game, and we don't want to be reacting to, the market's down or the market's up or whatever else.
Tanvir, what is this called?
This is Vada Pav.
So what the investors do is forget the stock market, take some Vada Pav, dip it into the spice, and enjoy the Indian food, which my wife is very envious of me right now, and forget about what's going on in the market, because the food is good.
Yeah, it is. It's one of the favorites in Mumbai. A bird's eye view of how you kind of sized up this situation with this mini crisis, so to speak, in the NBFC.
So let me just tell you from a bird's eye perspective, that I see credit expanding in so many different places. And it is just wonderful to see, because money is being put into the hands not of the rich, but of the middle class, and hopefully with time, with people who have not very much. And they are buying things that they need, and they're being given the opportunity to buy it. That's all fantastic. And these companies are providing that credit. And we were with one this morning, and their growth has been extraordinary. I think you could say 10x over the last decade. I don't know if we can mention the name, but
we can avoid the names.
I know the name.
Find out from Tanvir afterwards, perhaps. So that is really great for the Indian economy. Now, from my experiences in the United States, will never invest in a growing consumer finance business. There are 1,000 reasons why I'm going to have my head handed to me. There's a company that I'm willing to mention in the United States called Credit Acceptance. The people who've invested in it have made enormous amounts of money. I would never touch it. But boy, am I happy that it's happening. And so I don't have, now you'll come the expert opinion, he'll tell you specifically what's going on.
You would never buy Repco Home Finance.
No, but that's okay. And I will never be able to evaluate the people managing it. And I would tell you that the probabilities on what happens to those companies over time is that they inevitably, the vast majority, get tripped up in one way or another at some point because they suddenly have a refunding crisis for one reason or another. But boy, are they good for the Indian economy. And if I was the Reserve Bank of India, I'm so glad that they're there, and I want to find ways to support their growth.
And they're doing as much.
Now tell us what. Now tell us the reason.
I think
in a previous interview, Monish, you said that all these NBFCs, right, the people who are running these businesses did not read Hamlet.
Yeah, so I think the thing is that that if we had Hamlet in the CBSE curriculum, I'm not sure it's there or not, but the thing is there's a section with Polonius talking to his son who's going to go away, and one of the things he says, dear son, neither a lender nor a borrower be. And of course, Buffett paraphrased that, and he said, neither a short-term borrower nor a long-term lender be, right? And one of the problems that NBFCs have, in fact all lenders have, is there's a strong temptation to borrow short and lend long, because you just get fatter spread. So just first of all, just talking about levered financial institutions, in I think 19 plus years of running Pabrai funds, probably the number one place where I have lost the most money has been on levered financial institutions. I can probably very quickly come to probably something like more than $120 million that went to zero on levered financial institutions. Right now, thankfully, it's in the distant past, but I have the scars from that. I remember that really well. And the problem with levered financial institutions, you look at any bank or any financial lender, for the most part, they're black boxes. Okay, we are not able to see things at a loan level. We are reading reports. We really don't have the kind of detailed layers. And the second is, there's 100 different ways things can go wrong. There's 100 different ways things have gone wrong in the ones I've invested in. And so one of the things I repeatedly think about is, Monish, these levered financial institutions give you so much trouble. There's 100 different ways we can make money. Let's leave them aside. And so if we look at Repco, we'll talk about Repco when I'm done with it, okay, where we can have a more open conversation. But I would say today, probably out of 800 odd million, Repco is maybe like 4% of the pie, right? So quite frankly, if Repco doubles or triples in price or it gets cut in half, it is not what's going to drive where we are 5 years or 10 years from now in Pabrai funds, right? Now, so I think that one of the big lessons I have learned in the past from the levered institutions is stay away from them. And time will tell whether a Repco, which I spent a lot of time thinking about before we invested, will work out or not. I don't have any reason to think it wouldn't work out, but I didn't have any reason to think the previous ones wouldn't work out either. So I think levered financial institutions are high octane and they can be combustible. and one should be careful.
No, but what's on your radar? I mean, as you go on a shopping spree in India.
What I think is really unusual, and again, I'm sorry, Tanvir, no names coming out, but there's a few things.
Tried.
Yeah, exactly. Sorry, everyone. There's a few things where I think that, first of all, India's getting it right better than the United States and Europe.
Yeah.
There's a few companies that I've started to notice in India where I've kind of looked at it and gone, wow, this kind of company doesn't even exist in Western Europe or North America because they wouldn't be allowed to exist, and this is just an extraordinary business. But I guess I'm waiting for something to find things where, first of all, it's unusual to me, and I know that without coming to India every 2 weeks or every month, I'll be able to observe and follow the business, and I know that I'll understand it when I see it. I should say that first of all, I deeply, deeply regret that stupid day when I woke up and thought I'd made enough money in Crisil and that it was time to sell. And if I just kept my license from that time, which I didn't, that would have saved me an awful, awful lot. But the fact that, I mean, Monish is an extremely unusual situation because he grew up here, understands India, but then spent 20 or so years really, really learning about and understanding the United States. And at exactly a time when India sort of turned away from its former colonial master and become so many more people here are thinking and following American models, although I'm learning, for example, with RERA, not just American models. But the big insight that Monish had, I think, was to say, you know what, forget about the top tier companies and let's look at sort of like the companies that are not the sort of like the Nifty 50, and let's see what those look like. And I would not have even bothered to come here because I knew that I had no chance to start digging around those things. There's no question the ability to reference what Monish is up to, but then through people I'm getting to know through Monish to reference what they're doing. And here's something that we all do. And Monish talks about cloning. So Monish started off cloning Warren and Charlie. I continue to clone Warren and Charlie. But there isn't just Monish. I mean, at the time that I owned Crisil, Rakesh Junjunwala was invested in Crisil, and that guy is still invested in Crisil, and I'm not. But to pay attention to him and a number of other super smart people, and the people who specifically sit and hold things for a long time, is a great guidance for me. But at the end of the day, sooner or later, something will come up.
One of the key things in investing is independence of thought, right? So Guy actually is quite independent, and he marches to his own drummer. But one of the things I wanted to tell you about the timing of the market you're talking about is it only happens to me, no one else. Everything I buy goes down in price after I buy it. And everything I sell goes up in price after I sell it. But that's only my experience.
All those people who are questioning Monish's investments right now, that's his take. Yeah.
Exactly. So, in fact, even like a Rain Industries, I think after we finished buying, it went down to 30 rupees a share. And what else is new, you know? And so, so I think we are never going to get the timing right. And we should not even try. I think the thing is that's a futile exercise. I have no idea where the Indian markets are 3 days from now, 3 months from now, 3 years from now. Irrelevant. What will actually matter is how these underlying businesses that I own individually perform.
Yeah.
And if they individually perform well, you know, the thing is that Indian markets have done whatever they've done. But Titan has marched to its own drummer. Yeah. And that business has done phenomenally well. Yeah. And even in this market, it really doesn't matter. The business continues to do well.
In one day, you wouldn't believe, 4 people have spoken about how bullish they are on Titan today itself.
Well, I haven't looked at Titan in a while. I just know that the quality of the business. You know what I'm saying?
That 4 people
what I'm saying is that
being bullish on Titan.
so you talk about, so now Titan is an interesting business because it's not recurring revenue, right? I mean, it's some of the business, but Titan has a franchise, and one of the key things, you know, what Buffett says: if you don't know jewelry, know your jeweler. And so one of the easiest things for us to get taken is when we buy jewelry, right? It's very easy for us to get deceived. And so the most important thing is trust in the jeweler, right? And Titan and Tanishq, the biggest asset they have is the trust in tens of millions of people's minds on that brand. And actually there is no second. So if you think about it, they can go into a new city, second, third tier, fourth tier city, and people know that if I buy something from Titan, I'm not going to get ripped off.
Yeah. No, absolutely. There's tremendous brand value there. Monish, your fans know how you're thinking and where you're investing in India, but Guy, a lot of people would, literally be like, Tanvi, why didn't you ask Guy where he's looking to invest in India? What is on his radar? So I'm going to push you again. I mean, what is it? How are you going about this whole process? You made one investment in 3 months. You're not going to tell me which one it is.
No.
Okay.
Sorry.
But how about telling me how close you are to making your next investment, and where would it be?
I mean, one of the reasons why I very much wanted to come was to actually meet in the flesh some of the people that I'm considering investing in.
You mentioned RERA. Is real estate on your mind?
I think that India's...
He has
so forgive me, because it's just, this may sound awful, but, guess what? Indians like nice buildings as well, And it's like Indians
That's
like
true.
going into a nice lobby. They like living in a place where there's air conditioning, where things function, and that is happening in a way that's just extraordinary, and it's so much fun to watch. Although it makes India a little less foreign to me, but yeah, I think that the real estate transformation that India is going through is just extraordinary, transformational for the country in all sorts of ways, and is driving so many things.
What would be your opinion on the significant derating that mid-caps and small caps have seen over the course of from the start of the year till now? They've been badgered out of shape.
If you own mid-caps, just go to sleep, eat some great food, and ignore the sell-off. And if you don't own the mid-caps, get interested. See what's there.
That's very interesting.
So I would say that before we buy a stock, I would hope we would have figured out what it's worth, right? And so that is our reference point. What is the business worth? Not what the business is trading at, and definitely not what the business is trading at after we buy it. So we should not be reacting. I mean, if my entire portfolio drops 25% tomorrow, it doesn't mean that the businesses are worth 25% less. Those are two independent facts. And so I think keep the basics in mind. I mean, if you own an apartment, let's say you own a flat in Mumbai, and let's say you paid 3 crores for it, for example, and let's say that flat was traded on the Bombay Stock Exchange. Every day its price will fluctuate. And you would see it's 2.7 crores and 3.3 crores and then sometimes 2 crores, but you don't get a daily quote on your flat. And so you don't think about it. And I think the way to think about stocks is the exact same way. Think of them like the other assets you own.
And keep the faith.
Keep the faith, yeah, absolutely.
Okay.